fundamentally, I think that the mindset of office in San Francisco being a no-fly zone is off the table at this point. I think people are leaning back in and trying to understand the very question that you're asking. And there's a lot more people willing to have that conversation. So does that mean that we're going to start to see, $500, $600, $700 a foot, values again imminently? No, but the health of the market, I think, is directly correlated to how many people are willing to invest here. And the fact is that we're seeing a lot more appetite at this point to deploy capital here at these values.
The reason I saw the article, I think, about you guys in the Real Deal. I saw they acquired that building in downtown San Francisco. And you know what? This guy knows something I don't know. What is it? And so I wanted to find out. And that's why I reached out. I love San Francisco. I think it's a beautiful city going through some tough times. But my feeling is that, this is, you're starting to be on your way out. I don't know if you guys are at the bottom yet. You can probably tell us that as we're going here, but I'm seeing some positive signs here. And so I wanted to reach out and get your feedback on it. I know you guys have got a bunch of development. I'm going to have you if you could just do a quick introduction of yourself and your company, please, Cyrus.
Happy to. Just want to make sure is the frame fine? Everything's good?
Yep, you look good.
All right. So thanks for having me on, Joe. So I run Presidio Bay. We're an investment and development firm headquartered in San Francisco, but focused throughout California, predominantly in Northern California, and specifically in the Bay Area. We really focus on three broad buckets. The first is corporate development. So think built to suits or renovate to suits, with credit tenants, the federal government being one of our largest tenants in that sort of space. We do commercial development, which spans office, both creative and traditional, R&D and research labs. So think life science, but not just the biomedical spaces, but also the non-biomedical spaces, and retail as well. And then finally, we do high density housing. And obviously within the context of sort of today's affordability crisis and the RENA goals, it's front and center of most jurisdictions' minds throughout California. And what we've found is that as a result of that, we've spent a lot more time entitling and then developing larger scale projects that have a variety of those uses incorporated, where oftentimes in places like Menlo Park or Palo Alto or other cities where commercial development has been sort of frowned upon for years, now we use housing as sort of the means to unlocking some of that commercial FAR that otherwise as a standalone would be pretty tough to secure. So we end up sort of developing, and what we like to think of ourselves as we look forward in the next 5 to 10 years is really building a sense of place and destination and sort of communities that span live, work, play.
Okay. Now, can you kind of give us your personal background? Are you born and raised Northern California?
Actually, down in your neck of the woods. So born in LA, but grew up abroad. I lived in Southern California for a number of years post college, and for college, and then also post, and then ended up moving abroad again. And about 15 years ago, moved to San Francisco. So I've actually lived in San Francisco now longer than I have anywhere else, and it's certainly home.
Yeah, well, you've seen the last downturn then, didn't you? Were you developing through that?
I was, though in a different seat. So started Presidio Bay about 12 years ago.
Okay.
So coming out of that downturn, or I mean, at the bottom of that downturn, really, but certainly excited to see the opportunity and sort of take advantage of the opportunity today. But that does shape a lot of my thinking as to the resiliency of San Francisco and really what drives the demand here, both in terms of job creation and other aspects that we can get into. But that frames our investment perspective and thesis on sort of this contrarian bet today, or seemingly contrarian bet today in this market.
Well, I saw a report, I think on Twitter this morning, that somebody put out that you guys, and I think it was New York City, are seeing some pretty solid absorption right now for office.
And well, not just absorption, but also occupancy, right? So one of the things that I've talked about a lot, and I think it's a little difficult to see unless you're sort of on the ground. And it's not just San Francisco, but obviously the west side of LA is sort of pretty severely exposed to tech, but more so from the creative and content side of things. The fact is that tech moves quickly, right? And their mantra is move fast, break things, you know, and with that comes
Sure.
growth and innovation. I think Sam Altman had a really good quote, sort of said, you know, one of tech's worst mistakes was this remote, you know, work from home experiment. And that is in large part what's to blame for the hollowing out of downtown and San Francisco in general. But inversely, for as quickly as we saw a dispersed workforce, we're now seeing the trend really reverse. It's going to take a lot more than,
Sure.
you know, tech companies saying you're back in the office and leasing office to turn our city around, because with that came a bunch of other sort of street level issues, right? Just cleanliness, safety, and so on. But fundamentally, when the employers are saying you've got to be back in the office, you should heed that, and as real estate owners, and recognize that, you know, even though today's vacancy rates are as high as they are, you know, if you're looking at this with a long enough perspective, it's going to snap back in the same way that we went from sub 5% vacancy to 35% vacancy in seemingly 2-3 years.
Yeah. Now, do you think we're at the bottom in San Francisco yet?
I think it depends what you ascribe to be the reason we're at the, you know, in the situation that we're in, right? It's not just purely macro, in the sense that to answer that question, I'd need to have a crystal ball to say the interest rates aren't going to go to 10%, right?
You're a developer. I thought all developers had a crystal ball.
I think you've just got to be smart enough to mitigate and you know, place longer term directional bets. I think if you got, you know, a finite figure in your head, you're fooling yourself. But look, have we hit bottom? I think that from just a pure investment perspective, yes. I think the red line that was San Francisco and office specifically is finally starting to get erased. And so both investment committees, institutionally and otherwise, are looking at this as a huge opportunity. We haven't seen these types of values in decades. And you know, it's one thing to say that, well, it's irrelevant if it's, you know, substantially below replacement costs if there's no demand. But the fact is, the demand is there and it's building back up. So I'll just take 2 examples, right? Our 60 Spear transaction, 12 qualified bids by best and final. Well, it had gotten cut down, but essentially there's 12 bidders, right? 115 Sansom, there are about 24 bidders. That's 60 days apart, 90 days apart. And we closed at about $230 a foot, a little below that. Their bids are in the $250 range. They think they'll award at $270 a foot. Now, there's another deal, 123 Townsend, that Rubicon just closed at about $500 a foot. That's a little unique. There's 5-6 years of term left on it with PayPal, real credit, and there's some seller financing involved. But fundamentally, I think that the mindset of office and San Francisco being a no-fly zone is off the table at this point. I think people are leaning back in and trying to understand the very question that you're asking. And there's a lot more people willing to have that conversation. So does that mean that we're going to start to see, you know, $500, $600, $700 a foot, you know, values again imminently? No, but the health of the market, I think, is you know, directly correlated to how many people are willing to invest here. And the fact is that we're seeing a lot more appetite at this point to deploy capital here at these values.
Yeah, and everybody has to remember, you don't have to hit the bottom. You just want to be as close as you can, right? And because I think when it turns, it's going to turn fast.
Exactly. And I think what I would say to that is that a lot of the institutional folks we've talked to, certainly who aren't based here, recognize that, but are willing to say, hey, we don't need to time it. Like, I don't know if $200 a foot was the absolute bottom, right? Plus or minus. but I'm okay coming in at $300 a foot because I know it'll run back up to 1,000 at some point. So I've got plenty of runway. I just don't want to be the first one in and be made out to look like a fool. And so what's happening is that you've got a number of investors who are now, creating these marks, and that then builds up the courage for others to then also take the leap. There's sort of strength in numbers, unfortunately, when it comes to institutional asset managers. And though I don't believe in that concept and want to be contrarian and want to be sort of ahead of it, that's just how our business works. And that's totally fine, right? I don't expect core money to come back into San Francisco for another 2-3 years, 4 years maybe, but that's okay too. There's plenty of opportunistic and then eventually value add and, eventually core money as it sort of goes up goes down the risk spectrum, right? And values continue to rise. So.
Now, as you guys, you're still out there acquiring properties, right?
Yes.
A lot more bidders coming to the table?
There are. I mean, I think, like I said, 2x difference, right, in 90 days, just between our deal at 60 Superior and now this 150 Sansom deal.
Mm-hmm.
But I think each building is unique, and it'd be tough to brush the whole city and paint it in one stroke. I think we're sitting at North Park, our office is at North Park, and that deal just got awarded. It really only came down to 2 or 3 credible buyers at that value, right? I mean, it also comes down to the size of these deals because of the type of capital that's in the market right now. Is that I think anything sub 100 million is definitely going to have a lot of activity. I think things that are above 100 million, you're going to be hard pressed to find 20 plus bidders in a feeding frenzy.
Yeah. The what's going on with retail? Are you guys still having a bunch of retail move out, or are people starting to move back in? Because I know London Breed, I want to talk about that in a minute here, is doing a lot to really help the city turn around. It seems like finally there was something that clicked and like, listen, I got to help the community a little bit more. But what's happening with your retail right now?
So it's interesting. A couple things. One is that credit where credit's due. I think the mayor recognizes that, look, she's up for re-election, right? And if she doesn't get her act together, the past performance isn't going to be a basis for her to get reelected. Like, that's just obvious. And in an environment where, whether it's macroeconomic or local sort of, safety and cleanliness, like basics, aren't being addressed, then voters generally vote for change, right? So, her life, her political life and career is on the line, and she recognizes that, and so her team have stepped up. But so have others, right? I think one of the bigger piece of this story is actually that the community and business have stepped up alongside labor too. So there's actually this interesting sort of broad coalition that had previously not existed, right? These were all groups that generally had competing interests when times were good, but everyone recognizes that when the machine is sort of not functioning the way that it should, and the city's not humming, and the economic engine is not driving, it hurts everybody. And so there's this sort of unity of voice around moderating our politics and so on, right? So in June of 2020, London Breed was out there screaming, defund the police. So
I remember.
And the point is, right, that there's a wake-up call, but that comes with civic engagement that then reiterates to the electeds that, hey, your policies aren't working and we're not happy, and you'll be voted out. And so this is, in my mind, sort of a great example of how democracy ought to work. And so with that all said, retail, look, it's no secret that this is a terrible tax environment locally. And it's tough to run regular, business, let alone small business, and certainly hospitality businesses. The affordability crisis here continues to be an Achilles heel. We've had, I think, less than 500 new home starts this year, which for a city of 800,000, you can imagine, that continues to pose a big, deficit in terms of our housing shortage. And if we don't address that, we're not going to be able to staff all the restaurants and so on. And so the cost of, operating goes up, the margins are thinner. You layer that on with additional regulation that's sort of unforeseen. uncoordinated within, from within government, whether it's the Department of Public Health or others. And you have a situation that's sort of untenable for a lot of these, unfortunately, a lot of these retailers. Now, that's more on the F&B and hospitality side. On the brick and mortar sort of consumer product side, you've got a lot of issues as it relates to theft, right, and property crime. And that's not a San Francisco issue. I mean, meaning that's not a unique San Francisco issue.
Right.
That's a California issue.
Yeah, we see
And
that
Prop 47 is, Prop 47 is horrendous. And I think you couple that with, in our case, a former DA who wasn't prosecuting any of these crimes, and you have a horrendous recipe for essentially all business, right? But specifically small business, not being able to handle the leakage and theft and vandalism and so on. And so, again, the tide's turning on that too. We are seeing a lot more police activity. We're seeing a lot more prosecution, certainly targeting a lot of the organized retail theft, crime, the rings that we're operating here. So, we have a ways to go. I think the city is doing what it needs to because of the community's pressure, and the state now needs to. And I think one of the things that the governor needs to really do is figure out how to get Prop 47, on the ballot and repeal it in some way, shape, or form, because the promise hasn't held up, and we don't have safer and cleaner streets. We certainly don't have better neighborhoods or schools, right? Which was the tagline of the proposition ballot. So.
Right. Yeah, I really, it was really, when I started digging into this and researching this, she's done, the Housing Coalition, she's had conversations with them. They're not going to be giving out tents, because the whole idea of getting people to live inside instead of in tents out in the streets, big thing. I think that's really going to help. She made a quote, where's it? No more handouts without accountability. And I thought, okay, they're getting on the right path. And that was kind of I was thankful to see that. Now,
it was a big deal for her to actually tie drug testing, right, and sobriety, and at minimum, voluntary admission to treatment as a means of receiving any city-sponsored sort of support. Mm-hmm. And we had no consequences, right? People were just being the harm reduction strategy, which was here's some foil, some pipes and some needles, was just the wrong strategy for the current fentanyl epidemic. It was a hangover from the AIDS epidemic, which was more about clean needles to prevent the spread of that disease. Yep. Well, hammer found the wrong nail. Like, that wasn't the solution that needed to be used here. And so we're finally seeing that shift, which is great.
Yeah. Can you kind of walk us through, because I didn't really know how the community got involved, and I think that's something that other communities can learn from. What is your community doing to really help turn?
So a couple things. A lot of things, actually. There's no shortage of I think type A personalities in this city that, say, like, I see a problem, I'm not just going to sit back and complain. Right. I'm going to lean in and actually do something about it. But so you've seen a proliferation of a variety of community organizations, and we joke it's sort of blank SF. So Together SF, Neighbors for a Better SF, Grow SF, Advance SF. New Deal SF. I honestly couldn't even name all of them. Right. But the concept was really simple, which is that they each picked a problem or two that they wanted to focus on, whether it was voter education and participation, whether it was the homeless crisis, whether it was drugs and treatment, whether it's housing. And everyone sort of rolled up their sleeves and started becoming a part of the solution. And there's been a lot of coordination amongst these groups, which is great. And we're involved with a handful of them. But the idea is really simple, that really for a city that has as high a literacy rate and education rate that we do, and as much wealth as the city does on a per capita basis, our voter turnout and voter participation has been horrendous. It's actually below the national average, which you would think we would be setting the top marks, right, for in the city, in the country. So that alone, I think I blame apathy for getting us to where we are. And then I talk about engagement as being our sort of salvation. And these community groups are just emblematic or representative of that desire across the community for increased knowledge and education around these policy issues, and then also around the candidates. And what we recognize as a result of sort of being asleep at the wheel and allowing an awful DA to get elected through ranked choice voting with barely hundreds of votes, that the apathy and sort of the lack of awareness around who these people are that are running for office allowed a fringe group to essentially start taking over all these different organs of government that actually have a direct impact on our lives, right? Everyone thought that it was just the mayor that mattered, or barely paid attention to these supervisorial races, which is our city council. Certainly didn't pay attention to the DCCC, which is the Democratic Central Committee. That's who sends out these slates right before each election and says, these are our endorsed candidates. And people would just blindly vote based on whatever they were told. And what happened was the DCCC had gotten hijacked by these progressives. And so they started to propagate these, voting guides that ended up resulting in a bunch of these sort of pretty hard left candidates getting elected into office at various levels, including judges, by the way, right? So I don't know the last time you actually paid attention to who you were voting for as a judge. I know I haven't really, because I'm not even equipped to make that assessment. I mean, I'm just reading a candidate statement, right? So all these different organizations that are now starting to track and follow the performance of these electeds across all the branches of government, and reporting out on their policy positions, on their track record, and so on, so that voters are informed. That's what we're doing. And I would say that it helps that we've had a number of large profile, high profile folks actually come out and say, look, I'm committing $5 million to this. I'm committing $10 million to this effort. We have a brand new newspaper in the city, the San Francisco Chronicle that the Hearst company owns, has become a horrendous op-ed, rag for the hard left, essentially. I mean, it editorially is not that great, but the journalists, for the most part, now there are still a few that are fantastic, have become a talking piece for sort of a lot of the hard left politics. So the San Francisco Standards come about in the last couple of years as a voice of moderation and as a counter view to a lot of the sort of hard left type positions that the Chronicle and 48 Hills and a number of these other sort of local, quasi
good number of them, yeah.
Exactly. And I think that flow of information, again, has been really helpful because it's reshaping the narrative too. I think it gives a voice to the moderate, to the moderate majority that had previously not been that involved or vocal.
Yeah, I think getting into the middle, like you guys are doing, not too far right, not too far left. We're going to get more stuff done if we're in the middle and everybody is trying to go for the same goal. Look
here, it's all about what shade of blue you are, right? I mean, San Francisco, of a city of 800,000, there might be 10 or 15,000 Republicans that are registered and or who voted for Trump.
Sure.
I mean, that's not in 2020, right? That's not a lot out of 800,000. So, and the hard left wants to argue that, these are fascist, dark money, Republican, Nazi, and it's just like, no, we're all progressive. It's just you've taken it to a whole nother level of extreme. Yeah. That's not what we stand for. We need common sense to prevail, and that's this politics of moderation that's sort of at play right now.
Are you finding that you get a lot of your, I don't know if you call it city council? What do you guys?
The Board of Supervisors.
Board of Supervisors. Are you finding that you're getting more middle of the road people have voted in there?
So there's 11 seats, and they're district based. And in the last election, so subsequent to the recall of the district attorney of Chesapeake, and then the Board of Education, we had 3 folks that were recalled there too. Since then, we've had 2 truly moderate candidates, now supervisors, get elected to the board. That started to shift the makeup of the board. We still don't have 6 truly moderate centrists. We can get to 6 on a number of issues like housing and a few other things, and not all the time. But in this upcoming election, we have 6 seats up in 24, and we believe at least that that we're going to be able to get at least 3 of those 6, and with that, we'll have a solid at least 6 votes of the 11. And once the legislature, once the legislature is truly moderate, then alongside a pragmatic mayor, now whether it's London Breed or Daniel Lurie, or anyone else that chooses to run that's truly more moderate, then we can get a lot done. And so that's where a lot of my hope stems from, is that we're going to start to see some of those political alliances sort of form, like we saw in 2012, 2013, coming out of the recession, where Ed Lee had a board that was willing to work with him, and then passed all sorts of, the Twitter tax break, is what it's called. There's a number of relatively pro-business legislation that was passed and policies that were enacted that really resulted in the growth that we saw over the next 8-9 years before the pandemic.
Yeah, well, the fact that you guys are the companies, I went on your website, and you have on your website about the We Love SF movement.
Yep.
That's powerful. I mean, because people, and I'm gonna put you the link to your website down below, so people can go see your website and all your developments that are going on, or if they want to contact. Matter of fact, if any of you that are watching have any questions for Cyrus, put it in the comments. We'll make sure that we get them to him so he can answer them for you. But who right now, who's taking these office spaces? Is it AI? Is that who's coming back into the heart of San Francisco, downtown?
AI has a lot of potential. AI has a lot of potential, and I think right now, because it's such a favored sort of term within the sort of VC space, that just about anyone and everyone is trying to reshape themselves in some way, shape, or form, or say that they're AI enabled. But that aside, so I'm optimistic that AI sort of becomes commonplace and is utilized and leveraged in every vertical. And it's not just its own standalone, but as a standalone subsect of technology. And again, technology not being a single industry, but sort of applied to sort of every industry that's here, right? So GM is here through their Cruise autonomous car company, as an example. Mm-hmm. You've got construction firms, you've got aeronautics, you've got all hosts of companies that are here because of their tech divisions, right? I'm hoping all of them start to adopt AI. As it stands, AI on its own is only about 1 million feet of demand right now. I mean, we just had 800,000 feet of it signed in the last week, which is great.
One company took 500,000 square feet.
Yeah, to OpenAI, that's the creator of ChatGPT. They took 500,000 feet, which is huge. That's the type of absorption we used to have. But my point being is it's early days, and OpenAI is certainly at the forefront of that. But from a scale and just dollars invested perspective, but there's a ton more that you and I haven't heard of that are in that sort of 3 to 20,000 foot range that are proliferating right now, and that I'm hoping in the next 3 years, 4 years are going to start mushrooming in size, and that will be the growth that we see here. But that's not it. I mean, that's 800,000 feet of 5.3 million feet of demand, right? We're seeing a ton of demand in the finance, your traditional fire, law, accounting, and so on, just our professional services firms. And they're paying the freight. right? We're seeing this flight to quality, flight to experience. Folks are paying, triple-digit rents for high-quality product. And so, again, you're seeing this sort of segmentation in the market. But, JP Morgan's out for a couple 100,000 feet. There's some real big tenants that are out in the market. And they're looking for quality, and they'll pay for it, which again is sort of this economic engine and the heart of this economic engine, which is great.
Yeah. Now I see the White House they're making tax incentives for people to convert office to residential. Do you have a bunch of those projects or a few of those projects going on in the heart of San Francisco? Nothing right now.
No, the unit economics don't make sense as it stands. And the upside associated with office and sort of that asset class recovering, in my mind, certainly for assets like our 60 Spear, investment, that can be made to be differentiated and become sort of trophy, is just so much higher than both the cost and the sort of relative capped upside in terms of what nominal rents individuals can afford to pay, right? And so when you look at, in the absence of any incentives, both tax and otherwise, the math just doesn't make sense. I mean, you're looking at buying these buildings for $300,000-$400,000 a door equivalent, and spending another $500,000 to convert per unit. It's just, the math doesn't work.
Yeah, I did see that. I was doing a little research on who's coming in. Tidewater Capital raised $1 billion to be buying San Francisco and the Bay Area, all around the Bay Area. Michael Svo with Transamerica Building, he's doing a lot. Is he started remodeling that yet?
I believe so. Yeah, I think they're under construction.
Yeah, he's talking about $400 million he's going to put into that. And I was, Lord, that's got to be a tough one with those floor plates the way they are going up. That's got to be a tough. But he says he's got people interested, so more power to him, right?
My view, it's an iconic building.
Yeah.
He's obviously, implementing a pretty iconic program. I think locationally in today's market where there's 30 to 35% vacancy, and when you control for that and you look at the differentiated sort of trophy class, there's about 10% vacancy. That's still 10% vacancy. And so then the question is, where do you want to be within a relatively small area? And to me, it's sort of more ferry building and water adjacent than Chinatown adjacent, but it's an iconic building, so I think that offsets it. I think I would actually say that and I stare at it, by the way, right out that window. I'm across from it, but we're a block from the water that way, right? So they're 4 blocks, in. I'd actually say that with the floor plates, that sort of wedding cake, it creates a pretty fascinating opportunity because you can start targeting as small as a 2,000-3,000 foot user all the way to, I don't know how big the base is, but it allows you to target a lot of single floor users at a really large range that is in that, a lot of the activity that we're seeing right now is sort of in that, call it 10 to 25,000 foot range. And so it's that perfect strike zone in my mind.
Okay. Now in these, you closed on your office building a few months ago, correct?
Yep.
What was the occupancy on that? If you don't mind me asking, if you don't want to talk about it, that's fine.
No, happy to. Yeah. So we toured it in early May at 100% occupancy. The largest tenant rolled before we went into contract, so it dropped down to 30% occupancy, and the balance of the tenants roll by summer of 25.
Okay.
So we'll have a 100% vacant building by the summer of 25, which was part of our business plan and what we wanted, so that we could finish our full expansion and sort of real gut renovation of all the common areas and all that, and then start to tenant each floor as single tenant, floors going forward from that point.
And how many square feet is that building?
Once we're done, it'll be about 175,000 feet.
Okay. All right. Now, first of all, everybody listening, you want to go see the projects they've done. They're absolutely beautiful. And so I assume you're going to do put a good amount of money into this. What are you guys going to do other than just fix up the floor? What amenities are you going to be adding?
So first off, thank you for the comment on the project. You know, we have sort of a hospitality mindset, right? And so even though we don't build hotels, we view sort of every one of our product types as being hospitality driven. And when you think about who's going to occupy these buildings, one of the biggest things that at least in my mind I think about is sort of how are you going to get folks out of their homes and get excited about being in the office? And we talk about this sort of flight to quality. It's now a flight to experience. You know, we're running an experiential management business, a hospitality business is really the way I look at it. It just happens to be that the product that we're building are either apartments or office buildings or you know, R&D lab campuses and so on. And so specifically as it relates to the tenants that we're trying to attract here, which are in that professional services realm and or tech adjacent, we recognize a number of things. One is that today, you know, your building and your space needs to serve a lot more purposes than it did pre-pandemic, right? It's not just cubicles or workstations and conference rooms. There's so much more than just work that happens at work. And so we sort of think of it in three buckets. The first is health, wellness, and sustainability. So this notion that you really got to address the occupant's needs, right? And so the employee's needs in order to help the employer get the upper hand to attract them back to the office. So what does that entail? Fitness, not just putting in a gym to check the box, but a full country club looking, you know, locker room, full spa, so steam, sauna, cold plunge, hot tub, you know, actual lockers, a lounge with a bunch of TVs on there so you can throw the golf on, you know, at, you know, Friday afternoon when you decide to go do a quick workout in before going out, et cetera. Medical treatment rooms, so concierge, doctors on demand, massage, acupuncture, chiropractor, et cetera. All accessible and bookable through the app, appointments made through the app and or our concierge that's going to be at the building, that will allow for your team and the executives to be able to sort of schedule personal training sessions and whatever the need is, right? So all of that kind of in that bucket. And then from a building standpoint, addressing all the sustainability goals that, look, for as much as I think that ESG is, you know, a little crazy in terms of the fact that we've sort of coupled E with S and G, like the fact is that actually moves, you know, businesses in the public markets. And so, you know, to the extent that we can help be a solution to actually help them achieve their goals, then we do that through, you know, smart technology, indoor air quality sensors, reporting out on consumption, being able to change, you know, patterns of behaviors within the building and so on. So all of that is embedded into the technology that we put into the base building and then report out through on the app. The second bucket, so beyond health, wellness, and sustainability, is really community. And what does that entail? That's events, it's entertainment, it's gathering spaces of different forms, right? So from podcast recording studios. So, you know, next time we do this, you know, hopefully I have a little better setup than this, but legitimately content creation is at the heart of just about every business these days, at least businesses that are trying to keep up with sort of where the world's going. And, you know, if I've got a 15,000 foot office, you know, if I start wanting to incorporate all of these different things, like my 15,000 feet suddenly became 45,000 feet, and it just doesn't make sense. Well, as a 15,000 foot user, as a single full plate user, if I've got all this different ancillary space from library, quiet thinking space to a podcast recording or an AV recording studio, you know, where you can do photography, you can do podcasts, you can do video conferences, things like this. I've got a stage and an auditorium where we can actually do product or demo launches or investor pitch days, road shows, etc. We've got a couple of bars downstairs where you can host different events tied to a golf simulator, you know, and other sort of entertainment. where you can do all hands or happy hours with your team, things like that. So that's, and then obviously curating our different, TED type talks that we do and a bunch of other sort of industry events, and having all of our tenants host stuff there, both on a private basis that they can reserve or for the community, broadly speaking, and have folks come in from other, floors in the building to come enjoy it and invite friends into the building and so on. So the idea that sort of becomes more of a social club. And then finally, it's productivity. And that's sort of the third and least important in my mind as it relates to the other two aspects, is that's then your how do you work and what types of work do you do, right? And that's obviously your traditional workstations, your conference rooms and so on, but then that conference center, having outdoor space. So we're gonna have a big roof deck with a restaurant and bar up there, plus outdoor seating with heaters and fire pits and all that. Getting people to think that, hey, if I go there, I could, like Joe, you and I could meet in 15 different places. We could be in a cafe or bakery. We could go and chat downstairs by the pool table, go to the library. We can go into the podcast recording studio. There's this sort of plethora of things that you can do, places you can be to sort of facilitate your traditional workday. And all of that are things that you can't otherwise have at home. And so it gives you a reason to have to be downtown and have to be in that office. And that's really what a lot of employers and founders and so on who we're friends with are saying is their biggest challenge. That people want to be in the office, they want to be around each other, but they've got to be in a space that's inspiring. And so that's really what we're doing in this building.
Now, and I know everybody's going to be dying. I'm going to save a lot of comments. What's the extra cost for that? I mean, or do you charge for the extra studio space? Obviously, you don't have to give me your numbers, but is it a lot more? Is it, what's it cost to do something like that? Extra to do something like that?
To utilize the space?
Yeah.
So we sort of look at it in two ways. One is that you put that CapEx, if you buy the building cheap enough, you can invest the money to differentiate. There's passive use of the space, and then there's sort of more active sort of service-oriented uses. Our view is that service-oriented uses are pay to play, but there's some base level access that you get in terms of reservation and what have you to spaces that otherwise don't require service, right? So if you want to host an event, well, you've got to pay for, security and your custodial and an event coordinator to get your catering and all that, right? So that's pay to play. But otherwise, if you and I just wanted to go down into that space and it wasn't reserved and we just look on our app, we could go reserve any of those spaces that you just walk into. It's just like going into one of your conference rooms in the office. So we sort of look at it that way. And as part of our base offering and your base rent, that's sort of part of the justification for why we're pushing rents as well on a relative basis is that, even though you're paying rent on, say, 15,000 feet, you're getting 45,000 feet worth of functionality out of your space. So think of it that way, right? So it's much more, your rent is in exchange for a host of services, not just the four walls of your office.
Absolutely. I would think that they would. Now I know we're getting a little long here, but I got a question. The companies, as far as per square foot per employee, how much has that expanded? Has it been a lot?
I think that answer is still in flux for a lot of people, certainly in the tech space. What I can say is that by 2019, we were seeing utilization rates in terms of design as tight as 100 square foot per person in a building. So in a 60,000 foot, 56, 57,000 foot building, we're seeing 500 people. Those days are gone.
Yeah.
I think we're stabilizing back at kind of the maybe 250 to 300 for tech, but that's only because their headcount and their bloat's really been shrunk, right? I wouldn't be surprised if over the next 10 years on leases that folks are signing now, that you're going to start to see it compress back down, but I don't think it gets to 100. I think that goes back to maybe 150, 175. Now, on the professional services side, it's a crapshoot. I mean, it really is, because it's law firms in some, instances are still doing, 300-foot private offices, and, others are sort of more open. So I think that utilization of space itself, in terms of the types of different spaces you want to include, is completely in flux now. So you're going in to see a bunch of these new VC build outs, for example, and it looks like my living room. I mean, it literally looks like my house.
Sure.
With couches and dining room and dining tables, and it doesn't look like an office anymore,
Right.
which is great. But I don't know how that translates into like a headcount perspective. And I've got to imagine that you're going to see a ton of change over the next 3-4 years in terms of like furniture layout, TI modifications, as people start to answer that question.
Well, I do think that it's an exciting time for what you guys have coming up there. I think if they're buying, and it looks like from the research I did, there's a good number of competition coming your way. So hopefully, you're ahead of everybody right now. But you guys do a beautiful job. Thank you for coming on today. I appreciate you taking the time and give us the insight of what's really going on, because these headlines these days, you just never, 90% of it's negative about San Francisco, and it's a city that I love, and obviously you do too.
Well, Joe, I really appreciate you having me, and you're absolutely right. The one thing I'll leave you with is this: I would never bet against San Francisco. We've just got an economic engine here that's unprecedented and unparalleled. And whether it's VC investing, just the folks that are here innovating and creating, and just talk to people, and the number of people that have moved back here from Miami and from Southern California and from Montana and so on, who all left and then recognize that they need to be here because this is sort of ground zero for the new wave of sort of innovation. It's really invigorating. So.
Yeah, smart people wanting to make a change. So you're in the right spot. Well, thank you, Cyrus. For those of you watching, make sure you give us a like. And if you haven't done so, make sure you subscribe. And hopefully we'll get Cyrus back on here in a few months to see how everything's going.
Hey, thanks, Joe.